Yeah, I'm losing my
So
edge.
today we'll be talking about price extremes in the smalls, Pete. We've seen a lot of them this week. We've seen a lot of them intraday, and I want to kind of conclude with intraday price extremes. But the first thing that people tend to think about with a price extreme is longer term.
Yeah.
And you talked about this a little bit earlier. Day 20 for trading the smalls, first month or 4 weeks, whatever kind of time increment you want to look at here. And each of these three products that the small exchange has launched with has seen kind of its own price extreme. For the metals product here in orange, an all-time price extreme going back years and years, as you saw gold making an upside price extreme as well. For the small stock 75, the stock market here, a nice upside price extreme, not eclipsing the highs of months ago, but man, getting pretty close and just a huge extreme in itself. And then also this dollar product as well. Pete, a lot of movement, a lot of extremes, and thankfully a lot of back and forth. Because when you're looking at price extremes, now that we've kind of defined them as just a price extreme is, some people might define it as an all-time low or high in a market. But I would just say the last, few weeks to months, kind of an extreme price, something that seems a little bit crazy. After defining it, what do you usually look for? Like why look for price extremes, I guess is the question, Pete.
Right. And it's a great point here, because are we at highs or lows? We're close to highs on the precious metals. But for me, that extreme, I don't go back like we talked about natural gas being at 20-year lows. Yeah, that's a price extreme.
Yeah.
Here, I think if you limit yourself to, okay, everything has to be a new high within 5 years or more is my price extreme, and that's what I'm interested in. I really look at price extremes as a function kind of the range we've been in, the amount of movement we've seen over a reasonable period of time if I'm scalping, and where's an outside piece of movement. And that becomes that price extreme. It could sit like we see in SM75, not at the high or the low, but somewhere in the middle. And it's really that, I don't like using the word velocity because it almost begs, well, how do you qualify velocity? But when we see outsized movement over a shorter period of time, there's that price extreme for me. Sometimes it's in divergence, but you've got to be mindful of divergence unless you couple that with a look at correlation. Because if you're looking at divergence over random products, it's a tough trade.
But yeah, here looking closer at the stock product to start, you see this upside price extreme in the second week of trading here in SM75. And like Pete said, if you're looking back the last 5 years or 10 years, or right now natural gas showing, I think, a 2-decade plus price extreme, you're going to get those every once in a while. I mean, 2-decade plus price extreme in natural gas means you didn't get that price extreme in natural gas for the last 2 decades. And I'm not trying to look to trade once every 20 years, Pete.
Well, that's it.
But yeah, when you look at something like this, and it's maybe a function. Price extreme is something that I think a lot of people know and understand. But a term that we use that maybe people aren't super keen on or just don't know that well is kind of like what's breaking out of the chill zone or the normal range.
There we go.
And when we're
starting to quantify it.
When you see kind of this stock product trading between $35 and $45 here, and that being normal to me, you see this breakout above that. That's what kind of dictates a price extreme.
Agreed.
I would almost say that all of these price extremes that were all-time highs in this product are less extremes than this one, which wasn't that all-time high, because it's almost like, okay, the range is here throughout, but they're just kind of creeping up to new all-time highs, whereas this is a much more extreme kind of price to me here.
Absolutely. And you know what? It's a function of the time it takes to get to the extreme. In the short term, I mean, long term, if you're looking at strategic positions, it's a different story, but I absolutely think it's that function of movement over a certain period of time. So, and this makes a great case. Looking at November through January of last year, they were all highs. Every one of those little bounces was a high, But were they interesting? They were. They were. It was an ascending chill zone, which is almost
Yeah.
a confusing term. So let's not even use it. But it was a range that was not interesting.
Well, and what you have here, because so then the next part is, okay, you've helped me kind of pick out what this price extreme might look like. Why do I even care now? And it's because, while these are all-time highs and we don't necessarily look at them as extreme prices, is because you're seeing no flexibility or kind of like you like to say, Pete, elasticity off of these highs.
Okay,
All of these are just kind of uninteresting. But when you see a true price extreme here, where markets hang in a range and then boom, a 10 to, I think this is almost a 15% rise in a couple of days here. What you see is, like Pete likes to say, elasticity off that.
You know what?
Here you're seeing months of new highs.
Using the patented words.
You're starting to get mad that we're all taking your words. Yeah.
Bespoke.
Bespoke isn't even your word anymore. That word has been completely co-opted by our chief regulatory officer. You don't own the word bespoke anymore. He's copyrighted it.
It's been pirated. He's like he's like a Nigerian prince of work. He just goes in there and just takes stuff and repurposes it.
But yeah, what you're seeing here, like the distinction is the fact that you're not seeing anything crazy here. So like, what are you going to do? Just keep selling these new all-time highs here? Whereas here, this isn't a new all-time high, but it's this extreme move that warrants a lot of back and forth after it. And it doesn't always happen like this. Sure, it could have gone from 45 to above 50 to above 55 and then come back. But what's nice with these price extremes is at some point you tend to see some reversal of that move. And you've seen it actually a couple of times here as we move on to the precious metals product, Pete. I mean, as recent as this week, where this market made an all-time high here, which also coincided with a nice big up move, which I would call a price extreme. And then almost immediately, I think the next day came off of that. And that's what you're looking at, identify the price extreme. And then what do I do with it? Is I trade, you can trade whatever side of it you want. You can use whatever strategy, but it almost necessitates back and forth and these reversals. And you also saw to the downside here, I didn't even highlight, a huge move lower in precious metals and then a big bounce off of that. Of course, you could have said when it was down here at 56, that was a big move lower and then it extended through it. Sure, there are plenty of times where you get in too early or it kind of stagnates a little bit for the short term. But what's nice when you identify these price extremes, they almost always come with Pete's elasticity around them.
Wow, I'm going to walk away from this show with $20. I love it.
But yeah, Pete, it's almost like a marker for opportunity, a marker for back and forth, no matter what your strategy is, right?
Yeah, absolutely. And that's, Frankie, you're spot on. That's where you want. And here's, this is kind of an important takeaway. We talk about the appropriate size of products. And you know what? This back and forth constituted anywhere from $20 or $25. I shouldn't say that. Probably $40 high to low today in smalls precious metals to maybe $60 on some of these. Two things on that. The $60 is very comfortable, and that's 60 ticks. That's 60 different places to get involved. Yeah. We talked about a 4-tick range of notes, or the equivalent in Treasury futures. It's the exact same $60 move, but you've got only 4 unique places to participate. So you know what? Think about that in terms of opportunity and management. It's really important. You know what? Comfortable size, and you want that number of participation points, and this is what we're looking at. So lots of interesting stories to play through in all these markets here. These are interesting times, and times we want to take advantage of it. Okay, Pete was wrong. He was too early to this dollar short.
Sure. Yeah. And this, that's a nice point here, Pete. Like going across these different products, if you did get in a little too early on this extreme, you sold 47s instead of selling the high at 51 or 52. What's nice is there are a lot of unique prices. Every penny is its own unique price, but each of those pennies is just worth $1. And if you do get there early, you're not going to get hit as hard as those traditional futures. You get in here early and you lose a couple $100. That sucks, man. Nobody enjoys that. But you get in here too early with the traditional futures that are so big, you lose a few $1,000s, and that just doesn't build
Well,
sustainability.
that's
But
it.
yeah,
Yeah,
also here,
benchmark gold that low to high today was $5,000.
yeah,
So
craziness.
you know
Not
what?
fit for the
You're
retail trader.
throwing huge lawn darts like the size of you. Have you ever played lawn darts?
I have not played. You play such funny, weird games in the suburbs.
Lawn darts are like
Just
huge darts that you throw in the backyard and you put down like hula hoops, like 30
no,
feet
I
apart.
got it. It's pretty self-explanatory, but like
Yeah.
I would just play bags, man. Just throw the bag in the hole
Yeah,
and then have
bags.
a beer. I don't understand.
I built the bags
You
game.
guys
It's kind
play
of
that weird golf game where you're like throwing.
oh yeah, the hillbilly golf. I love that.
Just throw the bags in the hole, man,
You know
and
what?
drink your beer.
See,
But
this is
anyways,
okay. Narrow mind. So let's take a look at this dollar.
small dollar doing the same thing but to the
Yeah,
downside. What's nice about this is going through these three products, an upside extreme here in metals this week, an upside extreme in the small stocks in its first or second week there. And then also about 2 weeks ago, a downside extreme in dollars, different asset classes, completely diversified, showing this opportunity of price extremes all in the first 20 days of trading. And
right.
you see here again, a bunch of movement lower and then this price extreme down here at 154, and then a little bit of reversal, and actually just some decent back and forth. A bounce back, a sell off, a bounce back, and we'll see where this market goes again. But these are the prices where you tend to see good opportunity, not kind of like in this BS here where it's just like it's in the middle of its range. It's up a little bit today, but I can't really formulate a story. No, you want like this kind of move here, this
Well,
kind of move here. And what's nice is we don't care about what asset class it is as long as it's diversified and it's different than my other positions.
right.
And also, we don't really care necessarily about which direction the price extreme is in. If you play your cards right here and you were, very mechanical with this neutral opinion on markets, you could have had profits buying and selling dollars in
Right.
just a 2 week range here in mid March. And hopefully we continue to see that. We're seeing it across asset classes.
Right.
We're seeing it,
And that
from week to week.
and Frank, you're exactly right. And that spike, the trade down to 152, and you caught a little bit of the bounce, and you wanted to be clever and trade the other side. You would have been looking at 158 and a half, 159s. And would
Sure.
you have been early to the game? Absolutely. But you could have deployed some 158 and a halves, 159s,
Yeah,
160s
exactly. All the way
at
up
200
there,
at $185 per contract in terms of overnight margin. And you're sitting through, three lots, you're sitting through about a $400 extreme. It didn't overprint. It printed where it did. Did it move farther than we would have thought? Sure it did, but it let you stay in the game. And that's, we know from our experience, cumulatively, our time trading, it's all about being able to stay with an idea until that idea materially changes in your mind. And
yeah. No,
rather than the market forcing your hand and capitulating on that idea because the movement, you were early or the movement was too extreme, you want the ability to manage your ideas by their ideas and not be compelled to manage them by P&L.
totally right. These are all price extremes that could get a little extreme and move past people sometimes. But
All right,
across all three of these products, only doing so by a few $100s at most in any of the scenarios. But
Okay, take us away. We got one more slide.
yeah, but I'm actually going to go over to the platform because I wanted to show intraday extremes too that
Good.
present themselves. But if we just go over to the platform, I mean, I didn't anticipate seeing this exactly in today's trade with the small stock 75 because you're seeing this notion. A lot of people wanting to be short stocks these days. They're worried about coronavirus and maybe good reasons to be short the stock market, but also just intraday giving you a ton of selling, trying to get through, see, where the extreme is here. The extreme was down to around 44 and a half, $40 in the small stock 75. Pete, a bounce back of a couple of bucks and then back down to these
Right.
lows. I mean, whether you're looking at extremes on a day-to-day basis or a week to week basis, or like we kind of made fun of a little bit, years and years of extremes that'll have you waiting a lot of times. You can also look on an intraday basis and just say, okay, this market opened up around $47, sold off all the way to almost $44, and that is a really big freaking move, and that's where I'm looking for this extreme. And you see the reversal if you bought it and look for the bounce here. But also, if your strategy is trend following and you sold into this, it's nice to see, maybe you were able to get out for a profit, or maybe you ended up taking some heat, but the market came all the way back to the lows. So, I mean, no matter what your strategy, once again, just looking for these extremes to show back and forth. That's where you get it, is at these extremes. And that's
Yeah,
where, we think you get
absolutely.
opportunity.
And it's a good summation of the week. And you know what? I am, and I think we're all proud of, for a new product. That's a good looking chart. We've seen new products that have, a trade, a flat line, a trade, a flat line.
Yeah.
This is showing all through the day. There's activity, there's back and forth. And you know what? This looks very similar to everything else we look at in every
Yeah.
other different spot. And that speaks to liquidity. And that's really exciting. And that liquidity
Wow.
story keeps getting better and better every day.